Good morning, nieces and nephews. It's your Uncle Charles here, running a little late this morning, but I'm here another day to be able to talk to you guys. Truly a blessing. Looking at the charts here, SPY yesterday decided to cool off a little bit and give us a doji candle. We also have an inside candle set up here where the yesterday's candle was within the range of the preceding candles range, or I call it the mother candle. Overall, it's a sign of just taking a break. Market needed to digest the new all-time high, apparently. Before we get to the plan for today, hopefully we can all end the week strong. I want to talk to you guys about safe entries. Safe entries. Now, something that I talk to you guys a lot about is trading with the price action level to level. You know, when we break out a resistant level, we want to look to long. We break out we break down a support level, we want to look to short. We want to trade with the price action, I like to say. But are there any entries that are more safer than others? Okay, what are some tips that I can give you guys? First of all, trading with the traps is always a good thing. It's always a good decision because we look at this market, we know that it is a manipulated market. Okay, if you think we are trading in a nice market where it's fair and everything goes according by the book, you are wrong. Look up the composite man and learn about the composite man. Just look it up, Google it, composite man, stock market, go down that rabbit hole, learn about the composite man, and you will learn how the market is moved. Okay, you'll know why I always talk about the market makers. Okay, you'll know why I don't trust any of the move. This is why I trade like a sheep, up, down, sideways. It doesn't matter because it's all manipulated. So if we know that it's all manipulated, we know that there's going to be traps. The best entries are trading with the traps, false breakouts, false breakdown setups. Okay, we also need to have the right mindset. We need to have a probability mindset. Okay, you can't just believe everything is 100%. Okay, false breakouts and false breakdowns are great trade setups. I used to, and I still refer to them as the greatest trade setups of all time. But even the greatest trade setups of all time are not guaranteed. What you want to look for are trade setups with high probabilities, okay, based on the market tendencies, years and years and years of data of what the market tends to do, what it is its tendency, because it has its own personalities. Each ticker symbol has its own personality. Okay, so trading with the traps, let me show you what I mean. Okay, so this is a 15-minute chart of SPY. Okay, it was, as you guys see, it was very trappy yesterday. Now I always talk to you guys level to level. I always assume every day is going to be a choppy day. Why? Because I have a no greed approach. It's safer to assume every day is going to be a choppy day, for me at least. So I just play it level to level. This is an example right here of what a trap move is. Okay, so yesterday it was choppy. SPY cleared. I had a level of 576.5. It cleared, popped up to the sell zone. You guys see in the previous candle, this was a sell zone. I had a 578 target, but this sell zone right here kept preventing SPY from hitting it. And then what happened once we got to that sell zone? It broke back below 576.5. This is an example of a false breakout. It cleared 576.5, broke back below 576.5. That is your trigger to enter puts. And if you see on these other candles, it even back tested 576.5 as a resistant. Back tested as a resistant. That's confirmation right there that, hey, we got a roll reversal, because you see we cleared 576.5 on this candle, the 1145 candle, came back to back test it and it failed. Resistant did not turn to support. But when we broke back below 576.5 for the false breakout, it retested as resistance. So we can see support turn back to resistant. That is bearish price action, and we trade based on the price action. So that right there is a false breakout setup. That's a trigger for puts, and you want to play it level to level. Okay, you play it level to level. You take most profits there. Now sometimes you would leave a runner, or you can leave a runner anytime you want, all the time, sometime, never, up to you. But you play it level to level. You can leave a runner. From there, the market is either gonna go back and hit your stop loss, okay, or it's gonna break down 575 and keep on going in your favor. Either way, because you took most profits playing it level to level, even if the runner's stop loss get hit, you will be overall profitable on the trade. So false breakout and false breakdowns are the highest probable trade. It's not 100%, but they're the safest trade because you're trying to trade with the traps. Another way to enter that's safe, besides the false breakouts and false breakdown, like right here we have an example of a false breakdown setup. Okay, we broke it down, had a 572 level, we broke it down right there, we broke it down, and then we recaptured it. That's a false breakdown setup. It's great for calls. However, another breakout that's good for calls, you guys see right here, boom, oh, right there, that one right there. Okay, you guys see how it hit my that's a 573.7 level, that orange line. You guys see how it hit 573.7, right? And then it pulled back. All right, that it hit the level telling us, hey, we respect your resistant level, we recognize it. And then boom, on the next candle, on the next test, it cleared it. That right there is the trigger for calls, because you hit it the first time. Usually when the level gets hit the first time, it'll reject. And sometimes if it does break out, it's more likely to be a false breakout. Okay, not always, but it's a lot safer to see it get hit initially, reject, and then it retests maybe a second or even a third time, and then the second or third test it breaks out. That's a more safer entry right there. Does that make sense? And it works the same for puts. If a level hits a support, if SPY hits a support and then it gives us a bounce, and then it breaks down that support, that's a dead cat bounce setup. Does that make sense? It's a dead cat bounce setup. But in the bullish case, it will look like this. We'll hit the level, reject, give us probably put in like a higher low, and then the next test or even the third test, break out. That's safe for an entry for calls. All right, I hope you guys found this helpful. It's just a few tips that I can give you guys, all right, so you guys can improve on your entry. As far as the plan for today goes, guys, we're going to keep it as simple as possible. I have 576.5 fib level, and then the high of this preceding candle, the mother candle, is at 577.71. I do have a 578 fib level as well. So quite simple. If we want new all-time high, 576.5 and 578 must clear to put 579.5 or higher in play. Above 579.5, I have a 583.66 fib level as well. But for more upside and to keep this trend phase going and keep it bullish, 576.5 and 578 must clear. Okay, to cancel this trend phase, because remember we had a chop phase when it was flagging, we broke out the flag and it went up high to new all-time highs. To cancel it and to turn it bearish, 575, 573.6 and 572 must fail. If we break back below 572, that's a break back below the flag and would be pretty much a false breakout. It would be bearish. Put in 570, 568, and 565 in play. Below 565, a previous strong buy zone. Below 565 would be very bearish, guys. Bears take control. All right, Triple Q did not really cancel the double top just yet, but it looks like it's trying. If it can clear 493 and 495, then double top is canceled. Put in 497 and 500 in play, okay? To keep the double top potentially in play, it's got to stop breaking down support levels. 491, 489, which held yesterday as support, but breaking down 489 would definitely be bearish. Put in 487 in play, 485, 43.5, and 482, okay? Watch the behavior of the price action. If it start breaking down support, look to short. 491, 49, look to short if they break down. If we get above 493 and 495, no double top. Above 495, double top is invalidated. NVDA continues to be bullish. It continues to be bullish since breaking out the downtrend line. Next resistance at 136 and 138. If it clears those levels, more upside incoming to 140 or higher. Okay, now you guys can see that 131.5 level continues to hold as support. Couldn't get the breakdown, but if bears can get the breakdown, that's when I would favor a deeper pullback. Okay, 134.5, 133, and 131.5 all must fail. If it doesn't fail, then NVDA could continue to go up higher. Speaking of going up higher, Tesla's doing the opposite, going down much lower. Next support is at 223.5. That's a fib level. If it fails, more downside incoming. Okay, I have a fib level also at 226.5, which is below. We're below that now. Can't fully get bullets unless 226.5 and 230 recaptures. I need to see both those levels recaptured in favor of relief bounce of some sort. Otherwise, if 223.5 fails, we could go down a lot lower, down to 220.5 and maybe even 216. Here's a little update on Apple. It does have an inside candle setup as well. All right, if 230 clears, I am bull bias with 232 in play, and above 232 will be a breakout of this downtrend line, and a bottom could possibly be in. Okay, to get bearish, 228.4 and 227 must fail. That will put 224.5-ish in play. And below 224.5, which is based on Wednesday's candle, below that I would be bear bias. Put in 223, 221.5, and 220 in play. All right, guys, that's my pre-market video for you guys. Thank you guys so much for watching. Definitely consider joining the Discord. Hit the like button. If you're not subscribed, please subscribe. Appreciate y'all. Peace.